Chuck Carnevale, and I'm the Chuck in the Markets Up Chuck. And, we're in the earnings season today, and everyone's all getting excited about, earnings reports of different companies. And, for example, yesterday, Intel reported, and it was given credit for the market rising to these, having this great, almost 3% advance yesterday. And, it really kind of befuddles me how the market can take one company's earnings and all of a sudden apply it as this, great euphoria, or for that matter, have it kill the stock market, which is also often the case, also depending on sentiment. And I thought it'd be interesting just to look at a company like Intel. This is a 20-year chart on Intel, and I want you to see that Intel is a decent company. Earnings have grown at around 9.4%, but it's also a very cyclical company. It is a technology, computer manufacturer, and it does go through very severe market cycles, as you can see. In fact, if you look at this company from just the perspective of the last 9 years, and this is after the irrational exuberant period you had, back obviously in the late 90s, you'll see that Intel is a very cyclical and erratic company. Now, they did have good earnings, and I'm very pleased with that. There was an article actually written in one of the major papers, it was either Barron's or Wall Street Journal, I forget now, but it talked about, Intel still has plenty of room to run. And, it's this kind of hype and hysteria that's not backed up by the facts and numbers that really, I guess, disturbs me. When you look at Intel, it's trading at 22 times earnings. And as I mentioned, it's a historical grower at, 8 or 9% long term, but for the last decade or so, for the last 9 years, it's obviously had no growth. It has traded at around 25 times earnings or 24 times earnings. So at 22 times earnings, even if I'm just using historical precedent, I really don't see where there's a whole lot of room for this company to run. The long-term record of this stock has not been good, at least over the last 9 years, about minus 8% compounded versus -4 in the S&P. So I guess the question is, what's all the fuss about? I don't think you can tie these things together. I think we've got to be careful what we're listening to. The bottom line is there are many, many good companies out there right now that are generating good earnings growth, and I've blogged about a lot of them in the past. But whether Oracle had a good quarter or not doesn't make the whole economy work or not work. And I just wanted to put that all into perspective and illustrate it today. To carry that through a little further, today J.P. Morgan announces great earnings. Earnings up 36%. Well, earnings are up 36% coming off of this real low base. You can see here by this chart that J.P. Morgan's stock price is correlated very closely to its earnings. We're getting a strong rally. We've had a strong rally from the lows on the idea that, the company is a solid company, and they did have to have some TARP help, and that caused their earnings to even be less than they might have been. But, this company is still a long way away from being healthy. But the point is, a 36% increase is not really a 36% increase if you look back a year or two. But, it was written and hyped up. Now, the irony of this statement is, I love it when they do that, because at least they're offering some positive, noise and information. What I hate is when a company misses by a penny or so, and then the market wants to kill the stock. The bottom line is, I am always encouraging people to think things through, to actually evaluate them for how they really are. A 36% increase is a misnomer, because still the company's earnings are at very, very depressed levels relative to their historical norms. So, put these things in perspective. When you look at them from the perspective of the fundamentals, as I always like to do with this fundamental research analyzer tool, it just gives you a much clearer, in my view, perspective of how things really are. So I'd like to kind of close today's VidX with a look at another New York bank, Hudson City Bank Corp, a much smaller version, much smaller competitor of J.P. Morgan's. But, if this company was announcing a 36% increase in earnings, it would really get my attention. As you can see, this has been, it's actually considered, they bill themselves as the most efficient bank in America. I want you to notice earnings growth has been superb. They didn't have all the toxic paper on their, books as some of the other banks like J.P. Morgan did. They didn't require TARP funds. You can see this company has generated a terrific return for its shareholders over a time when companies like J.P. Morgan have done, very, very poorly. So, it always comes down to not thinking about generalities and being more specific in your looks at. I think, this is a great little bank. J.P. Morgan is certainly a fine company and a big company, but, from an operating point of view, just because they had a nice quarter, that quarter is still far off from what their historic norms were, and I think we ought to keep that into perspective. This is Chuck Carnevale saying thanks for listening, and talk to you again tomorrow. Thanks.